What's up, everybody? Good morning. Market's opening. Bottom DD bands, cautionary, irrational-ish. NASDAQ looking like the problem child today. Market still pull back just a little tiny bit. Whoa. Ooh. Had nightmare last night. The market had I was trading. I even have trading dreams of all things. Trading. Market had a glitch. Market drops to 0 while I was long. Everyone got liquidated, and the brokers were like, sorry, these things happen. And it was like, no. And then I wake up and I'm like, oh gosh. Someone says, morning. Bullish? Am I bullish? Oh, I don't know yet. Let's see. I've been bullish for a while. Bullish-ish. And short squeeze still going. I'm not fighting it at all. It's been pretty good. The numbers been strong and positive. The Philly Fed numbers, jobless claims come out. Let's discuss those in a little bit. And a big part of the it's a nightmare, not a dream. I was like, no, and then I wake up, the alarm's going off. I was like, I gotta go trade. Okay, so maybe it's this international. I mean like a international. It's a like the global sign for you should probably sit out in the market today. So everybody should probably sit out. It's a warning sign from above. Thanks, Boss. I like the song too. I tend to listen to pretty arcane music. This artist named Puppet. This goes very well with the stream. We open it in 2 minutes here. Right at the 50K mark for the most part on the 10K challenge. I'm halfway there. How about the marker? Massive dump to the night. Yes, I've seen that. Let's take a look at these data points. The jobless claims coming out. It's kind of the big part. Main new camera. Pick this one right here. Boom. Okay. Data I'm looking at today, we're starting about 2 minutes here. The jobless claims coming through. Still more initial jobless claims. People are getting laid off, right? That's what that is. This is first time jobless, first time unemployment. People are getting, there's waves of layoffs. There's week after week. There's been 4 weeks of layoffs coming through. It's pretty nasty looking. Continued jobless claims. The people that have previously been laid off are not able to get their jobs back. This is kind of alarming. You kind of keep your eyeballs peeled on that. Losing that productivity. This is now the time where essential employees are getting laid off, not just your non-essentials. So it's going to look a little weird in the numbers. Got 1 minute till market opens. Philly Fed reports coming through. Home sales came out in 30 minutes. Yeah, so keep an eye out. Let's go right here quickly. Irrational right there at the bottom on NASDAQ might be cool. It's kind of like take the day off kind of day right out the door. Irrational, the outside DD bands walking right there. So that's already taken place. Rational already means red light. Sit on this, so. Actually, no, the screen, put this over here to the side. Welcome, guys. Smash that like button while you're chilling and waiting here. Love you all. Abigail, you nailed it. You nailed it. Exactly what happened. That DD band came out. If you watch SpaceX Starship launch, I've been following it on Twitter. I have not watched it though. Anyone else watch it? Down another screen. I should probably. So you should let me know when the spaceship is moving. I'd love to watch it. I was wondering where you've been, Barb. Welcome back. I think she was unusually quiet. Every day there's about 700 or 800 of you who come through the stream, but I still know just about everybody's name. I'm used to a certain dynamic. Let's take a look what we got. I'm just gonna kind of estimate where DD bands are. They're right about here. Market close. That's not true. Let me refresh my platform here. Take a look at what we got. Resilience is right on the edge. Market's opening at the bottom. Again, probably similar day as almost exactly the same day as yesterday. We had a BRSU. Resiliences are kind of booty for the CD numbers to come through. Scalping between monthly hedge and hedge is always a decent. Problem is irrational on the side here. So let's look at QQQ. So probably a 410.5 bounce. QQQ is similar, 315 bounce, same thing. With resilience, need to go positive, and this arbitrage opportunity where resilience could break hedge push or break did kind of nice. So I'm a little lost my voice a little bit. Sign's looking decent. We are in the bull zone, which means it will likely hold the bull zone. So monthly hedge push or breaks. Hedge breaks. We do have monthly expiration tomorrow, so be very, very careful to break here. ED's coming in positive again. Can be another one of those days where we do push positive. This is a 0.7. This is looking pretty nice. A positive resilience 0.7. I should take a little stab at this. Let it take a little bit of time. Let's watch this resilience number. That's pretty good. Let's watch. Be careful and resilience. I need to get right. I need to get off of hedge pressure to move this account though. Let's take a look at the playbook, everybody. So I'll pull this guy up here. BRSU playbook is these are generally what we call bearish plays. Well, it's not bearish, but it's not a downward place, but it's in the category called bearish. So hedge to hedge, our scalps between the two BRSUs are pretty common like that. Particularly any illiquidity pockets today that are moving quickly. Starbucks, Goldman Sachs. So yeah, trading in between here is pretty common. With resilience right on the edge, all lights are green. It's still bullish, still bullish, still bullish. It's a pretty decent setup today to recover. I don't dislike this. Resilience is right on the edge, so I wish this was stronger. It's weaker. It's going to be a fight. So what I'm expecting today is there could be, if the resilience is negative, half gap is resistance. So this is going to do this today. I'd love to load up here to go to there. I know the way that works. There. And then of course, there. Probably same as yesterday. DD, y'all know that play. Resilience, res less than 0 at this time. Probably fight all day and then probably turn positive at the end of the day. What do you guys think? It's a good way to look at it. What do y'all think? Right now, with resilience is being weak. Well, Nasdaq is actually being the stronger of the two, which is great because Nasdaq's on the gap down the furthest. Maybe I should pop some micros at this. But on hedge break for sure. And BRSU, why not short? What do you mean, why not I short? You can short. Not a terrible idea. You can do whatever you want. I only take one trade a day in this account. I need to do one trade that makes sense. I need to do long, no shorting. That's my rule for funded accounts. Yeah. My rule for funded accounts is the first trade to get above your baseline price, your baseline account value, is to swing a home run. And I'm looking for a long, all signs line up. Like good bounce off of something to something. Like I'm gonna hit it hard off of something so that I get a good buffer on the account. So I can't I don't want to take the short against all the bull signals. Even though the scalp is there, it's absolutely there. It's not a terrible scalp. If I were to short, I'd want all the signs to be short. Gotta hit a home run on this account first, right out the door. Good morning, everybody. Take a look at monthly maps. You guys haven't checked out Rocket Scooter? I might invite you to come check it out. There's a link in the description below. You guys can see the extended trial offer. Do I buy off the MHP? Do I trade outside the DD bands? Pretty much all the time. If there's a reason to. But I only trade small. You know how that works. Okay, so keep in mind, monthly maps are going to look a little funky today, and this is why. Because we have monthly expiration coming up. Going into monthly expiration, there's like an iron wall, and the visibility gets a little weird leading up to monthly beyond it. So as we're leading up to monthly beyond it, it's going to look a little funny. Sometimes. Doesn't have to, but sometimes it will. As soon as we get past Friday, the entire month shifts. And then it just anchors for the month, and then micro shifts on the way through. So the monthly map is basically proving that most funds and firms are only hedging about a month out, because these are sitting here. Longer term plays are very scarce. So as soon as you pass through these monthly boundaries, the firms moved immediately to hedging throughout the next month. And you'll see the shift. Right now, it does look pretty okay. It doesn't look like there's any of the muddling we've seen. But you'll see right here, I call it the muddling effect. You will see that there are very near-term puts above calls. This looks like illiquidity right here, and it's true. It's a real position. It's just, this is an effect of leading up into monthly. So you have some at-the-money puts right here, popping up. Do I think the upcoming bullish monthly map will have an effect? Well, this is the first time we've had monthly maps active, but we can test what happens at a monthly expiration. Positive ED. Monthly maps are still okay, but if you take a look at this, right? The bull side is now looking like it's weakening, and the bear side is weakening as well. Market's becoming rapidly illiquid leading into monthly, so. Have to be very careful there. So this effect right here, like, see, we were showing that the bull side was really getting stronger for the next week or two. Here implies that the next week is getting weaker, as in there's somebody liquidating before here. And while that is true, is what I like to call the muddle effect. Right when you get up close to monthly expiration, you basically have perfect visibility until monthly expiration. So like when we wake up Monday, you get a whole month of greatness. As you start approaching monthly expiration, just repeating what I said, usually about a week or two out, sometimes you'll start to see like positions appear right on the other side, just like that. It's not everywhere, it's right on the other side. So as of now, look at the 24th, 25th, 26th, 27th. Look at these puts. At the money puts, it just popped up. Do y'all see that? Like literally at the end of the day yesterday, we got this. What can we learn from this tomorrow? Tomorrow's monthly expiration. Is this something to learn from? This is interesting to see, right? Friends, smash that like button if you can. Do your best friend Matt a favor. Res on Nasdaq is great. S&P Res is great. ED is great. I'm not disliking what I see. Let's see what earnings you have coming up today. Hopefully I'm your best friend. Maybe your best trading friend. I'll take that. Look at this across the board. Everyone has surprise earnings, but not everyone's rallying. Tuesday, Wednesday. Almost everyone's come through as a surprise. Thursday. Why is that? Well, companies are trimming the fat for a while. dropping off. Non-essential employees. Unemployment reports are reflecting that. And the non-essentials were just like basically putting money back in their pocket, getting rid of people they didn't think they need, and saving the money going into earnings to give a good earnings report. They were tricking Wall Street. On paper, the company looks fantastic. Here's a little bit of what I call the muddling effect as well. Do you guys see that? This is what happens in monthlies. Like you see these spot positions, and it's likely that these people that are behaving right near monthly are hedging for monthly. That muddle effect appears right near monthly expiration. Does everybody see what I'm talking about? You have access to the indicator? You absolutely do. Right here. Click liquidity map, and it's there. Everybody see this? Do you know what I'm talking about? I say these are positions that weren't there yesterday. Why? Why are large market maker positions appearing right at the money? Like muddling right on the other side. It's likely because there's so much money built in the monthly expirations that this is immediately hedging somebody else. It's hedging for monthly. Maybe don't get squeezed out or something. Who knows? When you go to daily, you don't see what, Rogue Sabbath? Probably because they're panicking, right? Or they're at a different place. Could be. Go here. You must click monthly map right here. Click this button. Click monthly map. You have to click the button. There you go. No problemo. Glad to help. My man. I got you. I feel like we should make a series because we have so many tools on the platform now. How to use the tools where they all are. Or how do you click the button? I've made a couple videos like that, I think, but I want to make it more clear. When we have a new release, we should hype it out, create these videos there. It's been crazy. We've just been growing so fast and doing so much content. We forget that we should probably do things like that. Because I'm just all over the place all the time these days. Talk to you like you're 80 IQ. I'm kind of sluggish today. I went out and had some drinks last night with some trader friends that came into town. My buddy owns a club, really cool rooftop club. And the whole place to ourselves. It's fun. Trader lifestyle, baby. We went out and did some really nice seafood restaurant, or seafood-ish. It's like a really upscale mix of seafoods and everything. It's at a restaurant. Oh, did y'all see the pictures? That's my first time to meet Hub. I've met him, Rocky, before. That's kind of fun. We all do podcasts together. So we're all in the. This is like the Twitter community. So Leah texted me the other day, or a couple weeks ago. She's like, "I'm coming to town." She's like, "Take me out. I'm coming to town." I was like, "All right, let's go." I told Nicole, I was like, "Leah's coming to town. Let's go party." She goes, "Okay." So then Leah texted me today. She goes, "Hey, have you met Stock Trader Hub and Rocky for?" I was like, "Oh no, I met this guy. So I've been in podcasts with them before. They're cool dudes. They're writing a book on risk management. We were talking about it at dinner. Really dope. So super cool. The nicest guys, man. They're so cool. And you guys are welcome to check it out on Twitter. Give them a follow. Right, I can't wait to see what their book on risk management is. We were talking about it, and they were like, we'd like to give Rocket Scooter a mention in our book and everything. And I was like, wow, that's quite an honor. It was really cool. Honestly, though, if you guys are if you're in Houston, send me a message in Discord. We usually have little meetups everywhere, at least just me. Like we have, and my life might sound cooler than you think. We do a lot of board game nights, and all my friends are traders. We'll go work out together. We'll go do yoga together. We always do fun activities together for sure. I took this trade in my bigger account, not in the small account because I need to trade off of something. Again, show you guys. I just took a small long out the door. Resiliences are still kind of bootying on the fence. I like. Let me go ahead and pocket that. It's $2,000. I just took a scalp there. Oops, I'm just doing that. About that. Close to $2,000. I'm still too nervous to take it in this funded account. There it is. That's the 10K, 100K is now past 50K. I just passed the 50K mark. So now we're halfway there. Just took that quick long. The Resilience Nasdaq was great. S&P Nasdaq was slightly on the fence. None of the signs were green or red yet. DD was positive. Do I want to take a second trade today? Probably. Everything here does say to keep going. I do want to let hedge pressure bounce touch. Okay, now we have those housing. Is it the housing numbers? What is this? Red candle coming through. Hold on. Where's my... Oh, there you are. Where's the data? It's in 12 minutes. I don't know where that drop is from. So I'm curious to see if I do want to take the hedge pressure break. This resilience number is just not strong enough for me to really want to hang out on that trade. So basically I traded with a gamble long to add to it to go to there. I didn't take the trade here because I told you guys I was waiting for this, but in my bigger account, I'll take a trade and double down because I can do that risk, right? Red line resistance from last night. Oh, that's a great question. We should check that out. Let's look really quick. So yeah, everybody hit them rockets in chat. Papa took the 10K. We're past 50K now. I can't tell you, life is just great. I'm just excited. Just about whatever, you know? Like, you guys are the best trading community on the planet. Honestly, I can't begin to thank you guys enough. We bid a project last night with Rocket Scooter against some of the major platforms in the world. Major platforms in the world. I'm talking the bigger players. We bid a project with an A-lister. A-list. I can tell you who it is. Can't tell you anything. We might be their official trading platform. I'm talking A-list. I'm talking... You guys know how Rocket Scooter just passed its 3,600th user account. We'll be at 10,000 if we push this button or more overnight. Oh, also next week I'm going to be on Anthony Crudelli's podcast. I was invited to speak there along with Ashton. So in the futures industry, we're kind of meeting a lot of really cool new folks over there. So I invite you guys to tune in and check that out. I'll post it up on Twitter. I'm excited to see. We're going to be talking about gamma exposure levels. So pretty dope. So I'm going to come through and give them a little quickie chit chat about our gamma exposure, right? It's not GEX, which is typically that public domain indicator people use. So we use market maker gamma exposure with hedge pressures. So I'm excited to talk about that. So the project we bid on, if we get it, it's gonna be pretty cool. It's gonna, like I said, if you guys ever worked in construction or project management or engineering or anything, you know how it works. You go out for bids, people come in with their ideas, submit a bid offer, and then they get to choose. They choose who they want to go with. So keep your fingers crossed. Only because, and I'm gonna tell you why. In our end, working with talented traders has always been my push. Like everybody that we work with, affiliates, whatever, you name it, partners, you name it. It's always somebody who I believe I would stand next to and say, this is a person you should learn from. I don't put our name on anything. I get a bunch of Twitter message all the day. Hey man, I'd like to rep your brand. I'd like to be an affiliate. Like, I'm always like, we're extremely picky. We looked through 200 candidates and interviewed and selected 10. It took us a year to do it. That's it. And we just want to make sure everybody we work with are people that we would say that you will benefit from if you learn something from them. Like, we believe that their stuff is substantial enough to be worth it, right? Unique, they're credible, they're good folks behaving well in the space. They're not doing anything weird or shady, you know. And so to nab somebody, like somebody's interest, I guess I'd say, and to be the luckily selected candidate in a project, a big project with a big company, that I personally would again vouch for as like, this is a person you should learn from, is just continuing my dreams in this industry, is to build the most substantial financial network of reputable educators with a substantial thing to teach, as it's so unique. You can't go Google it and learn it for free. Like you can't go Google hedge pressure and learn anything about it. We invented this process. So everyone we work with is gonna be somebody that has something unique that's worth it. And that's what I'm excited about. Yeah, RFQs, you'll know how it goes. That's right. We bid on RFQ. I'm like, it's crazy because you guys remember the days when we would just stream a spreadsheet. Now Rocket Scooter's a substantial company with dozens of employees and contractors. So it's like, we have meetings. Yesterday we had it's funny where you know, where we are, where we've been. Yesterday we had a sales and marketing meeting with our director of finance and accounting, our head of marketing, our community manager. Matt, remember when it was just Matt on the stream with a couple mods? Here we are with executives in a corporate, where Rocket Scooters Corporation, if you guys didn't even know that. It's like completely, it's not even the same. Like, you know, y'all remember the DTV days. DTV was a little LLC I had. Rocket Scooters Corporation shareholders. Not even close to being the same entity, the same anything. So different, right? Y'all remember the old days and new days. Have you patented your process? We've actually created, let me tell you what we've done, okay? I'll give you guys a little hint. Number one is you wouldn't patent, I'm patenting some things, but not like the trading process. It'd be fruitless to patent hedge pressure and resilience and all that. It's more easy to design the fortress that they exist in and then patent the fortress, because the fortress is what's going to set our platform unique. Now, we will own a patent on this type of trading platform for sure. Now, like hedge pressure and stuff, you'll never be able to figure out how it works because of the fortress we designed. This is all, it's all done server side. So we create the calculations, open a WebSocket to the front end, and we broadcast the indicators to you as they're calculated. We broadcast these lights to you as they're calculated. Even the logic of the lights is done server side. So while that so the proprietary source code of myself is masked on the back end. That's the part that we're patenting. So it's correct. Companies like NinjaTrader, right? They try to do something similar. It's a very weak thing that they do. It's not a terrible thing. It allows vendors to create anything they want, sell it on a marketplace, and you got to go to the marketplace, click on some website that's external, go to some website you have no idea, and input your credit card information to download a zip file from some random person. Does that sound like something you want to do in 2023? I don't think so. I watched some YouTube streamer say that they put malware in their stuff to track their customers, and I was like, how would you say that in public? Jesus, like, so the point is that no, who wants to go download executable files or zip files from random third-party sites to them hand you some source code that is, you know, obviously it's encoded and encrypted, so you can't see how it works. You have to install the file on your own machine, and then you're also tied into their brokers. I mean, it's a whole messy process. It's not a terrible process. They were like pretty much one of the first to do it, but customer side, there's a little security there to have to go out and, you know, trust this reputable third-party site. They're not putting a virus on your computer, steal your shit, right? That's a little weird. Yeah, download a zip file for some random G drive to get somebody's super secret moving average crossover they change the colors on that they say will make you millions of dollars, and all of a sudden they're taking all your money and all your crypto because they got into your crypto wallet or something. It's like, ooh. You need to update your resume and send it to me. Actually, we are about to start hiring people. So yesterday in our sales and marketing meeting, we actually talked about people we need to hire. So Rocket Scooter is going to hire, and let's make the announcement now. Rocket Scooter is hiring an affiliate program director. Let me tell you what it entails. Okay, if you are interested in this, you have to be fluent in our process, number one, in our platform, number two, number three, great at customer service, sales, all the things that come. And basically, it's like a franchise manager. Said I invented, I don't know, pick something, Taco place. And we're going to put Taco Bells everywhere. When we set up a new shop, you go there, you train, you go there, you teach, you go there, you maintain, and you visit, you arrange, franchisee meetings, you get everyone together. You basically continue Rocket Scooter, like we do an update, an example. Monthly maps come out. You'd go door to door and train every new community we work with on the monthly maps. Seminars, webinars, things like that. We need affiliate program director. Want somebody it'll be part-time. There's not a need for a full-time there. You need a social media presence and other things. So if you guys are interested in that, drop me a resume today. We are going to hire that person probably within a week or two. Software engineers, we definitely need software engineers. It depends on, we need software engineers all around the globe for time zone purposes. So if you are US or European based, you have a different need than if you are based in, say, like India or Ukraine or somewhere more east. So our staffing needs, we need people on Amjad's time schedule. If this project goes through, we're going to hire 4 software engineers, but you need to be in 3 of them at least need to be relatively close to India time zones so that you can work with him easily instead of send messages back and forth on a handoff. We need 1 European or US based for the handoff to interact with the client. California is Silicon Valley based. That would be essentially if that would be somebody here on this side that we would, and these are permanent staff positions, by the way, so it's not temp. We'd come in with probably a 6-month to 1-year contract at minimum, and then they would staff permanently to maintain that thing that we're building in that relationship. So it would be permanent staff. So if you guys are interested in that, that would be on contingency if we do go through with the project. So that would be great. We will also have that stuff. Well, here I am just talking away about Rocket Scooter Company. So I love it. Like, it's so crazy to see like how far we've grown and how big we've gotten. I remember when we launched the product. You guys remember back in June when we in May when we soft launched all the old school DTPers. We soft launched and we had about a month of data issues. Like the data just wasn't working right. For some reason, we had a crash and it took us a long time to figure it out. I'm like laying on the floor crying. I was like, oh my God, it's all falling apart. And I just remember those days when we brought over the old schoolers, and it was just a handful of us in the charter company. We kicked it off, right? And then we hired a couple people, and that's it. And we were just, and then now it's like, I'm like, I'm like having like a freak out. I'm like, nobody's gonna buy this thing. We can't get the data to work, and I'm like, panic attack. And it was just like, because it was before we staffed up, so it was where I was putting everything on my plate. So we hired all the right people. We got so much talent. You guys remember the Rocket Scooter launch party and all the talented folks that showed up there for us, and that was great. I was like, once I hired all the right people and all the experts, we got all the people. Jod expanded his team massively, and then it was like soaring. And we just got our 3,600th user account yesterday in less than a year. It's amazing. Does it include stipends? No, you're gonna work for free, Eric Beaumont. I'm not gonna pay you. No stipends. There's definitely. Do you want a company credit card and a company Lambo though? That should be part of the job. You're a trader. We have to give everybody a Rolex and Lambo combo, perhaps, so you can match trading environment. No, seriously though, it's a paid job for sure. Quest says beware of public USB ports, aka public charging stations. That's crazy. I didn't even think of that. I've only used one of those things one time. And that was at the Bitcoin conference. I was like, oh, this is a cool idea. And I never even thought of it, that I plug that in and then shipping my data somewhere. Ugh, thanks, sir. Thanks, sir. It's fake news. Yeah, it would be highly illegal, for sure. But you would have to think if it's an established place, probably not. But if it's in a weird place. Okay, so I'm looking to see if I want to take any longs today. Again, off a monthly when we get there. Not really. That resilience wasn't strong enough for me to maintain that long, so I just took that small trade I had to hedge pressure, called it, and I'm gonna wait for a monthly hedge pressure interaction. Everybody, 200 something people here. Go hit that like button real quick. Push that like button. The algorithm will love you. Just a couple months ago, we had an average concurrent viewer base of just about 100 or so. Now we get up to like 250 sometimes. It's crazy. Appreciate that. You are the best people ever. All right, what do I want to do here? I'm watching resilience. Resilience is still negative. Hedge pressure breaks are upside breaks, by the way. Keep that in mind. Resilience is negative. We're still pressing in SPY hedge pressure. Against SPY half gap as resistance until that breaks. Remember, resilience can be delayed when you are irrational, so keep that in mind. You can be getting a nice little short squeeze on SPY, QQQ. So I'm gonna get started here. And then resilience can catch up. That discrepancy between here. You ever trade Dow? No. I'll be honest, I don't even know why the Dow Jones even exists. It has, to me, other than it's like established, like its establishedness. The fact I just don't trust it as telling me anything. It's more of a gambling instrument, just like the Nasdaq is. The Nasdaq is a gambling instrument on a few sectors. The Dow is a gambling instrument on a few companies. And extremely bull markets, extremely bear markets, the Dow and the S&P will be like near each other. But around the earnings season, they could be wildly different, as some of the companies in the Dow Jones may be smaller market cap in the S&P and therefore not affected by the entirety of the depth or the breadth of what S&P represents. So I tend to just stick with S&P and Russell since they're diversified and they have enough companies to really represent what I care about: money flowing into the stock market. And so the Dow just being so small and the Nasdaq being so limited, you have to basically just with the Nasdaq, you have to know that you have to be just basically really, you're trading those sectors basically, and the Nasdaq. So when you're trading Nasdaq, you have to just make sure you're very keen to what's going on in each of those major sectors like healthcare and tech, telecom. It's like part of the Nasdaq that, financial and energy may not be there. So the Nasdaq will have visibility for sector cycling, because if people sell their tech, buy energy stocks, the Nasdaq won't see that. Nasdaq would tank and the S&P would stay flat. Dow, just because it's limited with companies, may essentially tether to the S&P if those companies are just kind of trading and ebbing and flowing like the S&P is. But I don't trade it just because it doesn't represent money flowing in the stock markets. It's just 30 stocks, right? So the idea is DIA. That's what we use. We said DJA. Use that for I'm sorry, DIA. Do that. What's the ETF that we look at for Dow? So we can go to the conversion. Actually, I'll go to the conversion channel, check it out. That was, I hardly ever. Conversion. Thought it was DIA. Yeah, that's DIA. I was like, that's what I thought it was. Yeah, DIA. You said big upside and down. Yeah, well, Dow, it's gonna have its own mechanics to trade with. It's just as far as like choosing an instrument to trade. The only reason I would rotate to trading Dow, I wouldn't use it as a leading indication or anything. But if there's an opportunity there, like trading from here to somewhere, then yeah, we would have to have a Dow resilience clearly and a Dow DD and all that stuff to go with it. Give it some weight. But yeah, it did support monthly hedge pressure. If you're gonna put all the indices together, it does represent there's a handful of stocks supporting monthly hedge pressure, and also monthly hedge resiliences are positive. So the market's certainly not going to crash today, which is good to see. I'd like to get a more solid entry point, but I just don't trade it just because it doesn't represent what the S&P could represent. They're practically going to be similar. It's supposed to represent, the diversified basket, but with only a couple companies from each sector, it's hard to, especially in a recession, it's hard to see the full dynamics of what a recession can be doing to certain companies. It lacks broad exposure to the market. That's why I don't trade it. Thanks, Trump. Okay, let me know green bicep. What you see? If there's something else. I like it. It's nothing's really scaring me just yet. Okay, so I still want to get a trade off of something. The resilience is starting to push positive. 3 hedge breaks to the upside. IWM breaking hedge pressure to the upside, looking good too as well. I'm looking for trades from here, probably to fulfill bull zone. I'm going to put like a contract or two on it. But still, my rule is I want to trade off of something on this one. I don't want to chase anything. Market's looking great. Monthly expirations coming through. IWM monthly hedge break to the upside. That's pretty clean. We have a liquidity pocket, so be very careful here. DD being positive 70, 72. Again, bull side push. This could be great as long as resilience rectifies itself. It gets stronger than 10. Obviously, it'd be just like yesterday. Touch the bull zone, come back in. I kind of like that. I don't hate this setup. Let's see what earnings we have today. Let me double check. It's still nice and strong and bullish. It's just I'm not finding a good place to take an entry. So if I were to chase it, I'd throw something really small in it. There's no sign. There's no bad signs right now. Resilience is just slightly weak, but it's getting there. Let's get some rockin' chat. Just passed the 50K mark earlier. The 10K to 100K challenge. I'm trading about 73% win rate for the year. Show the entire yearly broker statement for this thing. Only trader you will see on social media, in the YouTube world especially, posting these yearly statements. You can see the whole caboodle this year. We got aftermarket today. Anything big? Next week's going to be a big week. Microsoft Tuesday. We got Google, Meta, Apple week. Coming up after that, Meta there. Amazon there. Amazon, not Apple, sorry. Yeah, and somebody asked, is it okay to short? I can't tell you what to do with you guys' trades. When y'all say, you know, shorting off hedge pressure to here, while that is pivoting, it's just all the signs are strong. That was strong. Nasdaq resilience is positive. The S&P was slightly weak, but there was no evidence to show that it was a short setup, right? While there is a particular resistance from here you can take, the problem being that the desire to get there is going to, well, see here, the pivot does try to work, but the desire for DD, which overwhelms everything, to go from bear side to bull side, that mechanic just is preventing this from easily happening. And we're irrational, which means you're gonna have pivot overshoots. It might still work. No, don't get me wrong. This could still be building out to do that. I'm waiting for that trade. You guys are saying, somebody was saying I want to take a short. I am waiting for that to take off. I would love to pile into a long right here to there, just to get a little bit more oomph on the trade. Would you take profit a half gap every time? Like every time. I would take, anytime you're trading, if resilience is a really strong, I'll hold to fill the gap. If they're questionable, like not as strong as I want them to be, I'll trade to the next resistance and get out, just like I did here. Like I put some money on the table. I was like, okay, I'll just take a trade just in case it blasts off. Put something with the intent to add more right there. Put a couple in, it started moving and I got here and then this was just hanging at zero and I said, you know what? It's at hedge pressure. There's likely to be resistance. Let me get out. And then it starts pulling back and then it starts going and I'm still sitting out. So nothing here, right? Call it Matt GTP. How do you know this is an AI on the stream right now? Maybe this is AI trading. That would be pretty cool. Teach it our rules. Can somebody go teach Chat GTP how to use Rocket Scooter and have it make trades every morning and then report to me in 6 months the profitability? Let's do it. Can we get it a Rocket Scooter account? Teach it all of our trading rules. That'd be hilarious. Chad GTP, the first robotic billionaire in day trading. Yeah. I guess you have to teach it the trading rules, the irrational rules, how big to bet, how small to bet. Just teach it all the rules and let it go. Does Rocket Scooter provide API for who? We do for enterprise solutions, yes. Like this one thing we're working on right now. Do we provide personal APIs for you to utilize our stuff into your into like your software, for instance? We don't provide personal development licenses. We'll provide a license to a company that's building an application for, like, if you want to get hedge pressure technology inside your application. We do have the ability to do that. Yeah. When res drops from 9 to 1 quickly, what does that say? It says a very big, heavy, high market cap stock is sitting right on the edge of half gap. So what you'll do is you can go here to the scanner and look for half gap breakdown and find stocks that are right on the edge. A stock moving through half gap that has a high market cap is going to have a very strong effect on resilience. And then as they pop up, you'll see them. You can search for the up case. I'll be back. I'm gonna go get me some water. I'll see you in a little bit. All right, I'm back. Hello, hello. Get some of y'all's messages real quick. All right, anybody make any trades today? Let's hear what y'all are doing. Tell me. Tell me. All right, get some of you guys access here really quick. How's everybody enjoying your first month, maybe first 2 months, first anything here at Rock Security? You guys having a good time? You enjoying it? Really quick. You guys having fun here? Rockskier is best. Phenomenal. Squalping, Jason. He said squalping reminded me of Squanchy from Rick and Morty. First week here, so just far market watching. It's smart to sit back and watch and take it easy with your first week here. It's actually looking pretty good. Resilience positive. You can pass through half gap. All things are squeezing up to the upside. Nasdaq resilience is kind of, just hanging tight. Looking pretty solid. We are searching for half gap breakups. Distance to half gap. Looking on the scanner here. Target, SPY, Apple. Let's get Apple real quick. Man, I love how fast the platform moves now. Right now, we're exploring getting our futures data in. So people keep asking about it. The first thing was to get monthly maps out. And to get the futures data. And then that's been kind of... People say, well, what's futures data taking so long? Because we have two massive things we're working on, right? That just kind of... We can't say anything about it, clearly, until we get closer to it. But now that the bid's submitted and all that... and also the other group is actual broker. So I'm gonna work with them to get our futures data and brokerage services put into Rockscooter. Hopefully so. So that's what we're working on now. You put on a small size, it's like saying getting chopped up. LOL. It's you have to get in, get out real quick. You have to trade off of something into something. That's why I'm sitting out, right? Not the signs are good. Everything's bullish. There's not a good entry point. It's one of those things that I'm like, man, I need a good entry point. Hedge should be a great entry point now. If Res stays really strong, but Res is still kind of hanging on zero. When S&P Res is at zero, I like to use Nasdaq Res as a tiebreaker. So to bet that the Nasdaq's going to carry the market today is probably a more appropriate bet. I want to see support here at Hedge pushing through here. I mean, we got it right out. Let me see if I can see it. Looks like we did get it. Not scared of this market whatsoever. I'd be greedy if I kept trading it though. But I am up 400%. Small account challenge. I have to tell you, patience is how you get there. You don't learn everything, in the first week or two. You certainly don't become an expert trader in 3 to 6 months. You stick with it though. You carve out a style for yourself. It does take a lot of time. You commit to yourself, whether it's here or anywhere else, doesn't matter. You got to put in your dues and really just take a day at a time until you decide what works for you. For me, I know in bear markets in general, like overall bear market, zoom out. We're in a bear market. We're in a bull wave in a bear market. We're in a short squeeze wave in a bear market as well. So bulls coming in, shorts getting out. And so I get in and get out as fast as I can. I don't try to trade for runner days. I don't try to trade for, hundreds of percent in a day. I don't try to trade for like 50% of my account in a day. I just scalp. I get in, get out, get in, get out. It's not a strong bull setup. All the signals aren't strong in bull. So you got to kind of just, the environment that you're in dictates a lot of that. When you stick with it, little by little, you get something that works for you. You figure it out just by taking a stab at it. Being chopped around this environment is absolutely normal. A lot of what you see is noise. You want to make any trade? No trade. Markster gave you some insight into markets another place has. Appreciate that. Whether you need to produce more videos explaining the platform features, that'd be helpful. I think we made a section called like tools and features, I think is what the training section's called. And it's supposed to be like, here's where you push the button for liquidity map. Here's where you push the button for this. Here's how the buttons work. Here's what the settings work. It's like a instruction book for the platform itself. Let me see what we got. It's been a while. When I say a while, it's been like I know we filmed some of these things. How to use liquidity map tool, scanner tricks, monthly map tricks. I know I filmed some of them. Let me see if I forgot to upload them. Strong bull setup, looking great. There's that half gap. Resilience is still positive. Things are looking good. This is what a great market day. Yeah, Alex on the same page as me. Watching that market push forward and forward, like I took a small trade just in case this were to happen, without a good strong entry. And my intent was to cost average in. I can take bigger risk in the bigger account. These funded accounts, you got to be very careful when you're on the edge. So if you don't get it, you don't get it. You like things over here, gets good indications on entries and exits. Sentiment, market health is helping with trade sizing. Yeah. I think as we're, you know, like I said, as we've been making splashes, it's crazy to see how people are very much ready for a new style of analysis. I think people have... All right, come on. All right. Fully charged phone. Go. People have responded very positively to a new style of analysis that looks at something in the market. You know, technicals have been just limited to looking at current price action and past price history to try to make a determination of something that's like right in front of your face. It's like looking at something that's like a foot in front of you. Like, this is the last 20 candles did. This is what it looks like now. This is my output is now. Let me guess what the very next moment in time looks like because of the shape of this move. That's the limitation of technicals, right? So to have something like monthly map that looks 6 months into the future, 6 weeks into the future, it's different. It's a different mode with planning. How can anybody plan picking an option strike price for next month's expiration when you're trying to hedge a position you're in? Are you just going to draw a line under price in the last month and say, okay, this is support, I'll buy my put here? It doesn't sound too sophisticated. But dynamically, being able to see where positions are distributed over the course of the month, it's insight you've never had before, and it's a different layer to maybe that line you draw into your candles. And to me, that was always important. When you're trying to look at a data set, you come at it from different angles. The less overlap, the more effective the confluence will be. So if two different tools both look at price action, and they both move up when price goes up, and moves down, price goes down, then there's a lot of overlap between what the functions actually represent. So the overlap means the confluence is weak. So when you do confluence of like a shape-based thing, like let's just pick one of these random shape-based things. You see these? Like, you can come up with infinite shapes of the market, right? This is just, I'm just gonna, this is fucking goofy. But shape of price, candles are also shape of price. Shape of price, you're gonna use that with smoothed out moving averages, shape of price smoothed out. They're not bad. They're absolutely not great. They're actually not any good. They're okay. Just okay at best, in my opinion. Shape of price, you just look at the candles, there's the shape of the price. But the idea that you would stack layers of these things on top of each other for confluence just shows complete lack of intellect of a human being that knows very little mathematics. You're giving yourself no additional viewpoint of the market. The functions are so similar. They practically are the same. So is this a trapezoid pattern? Okay. Oh, well, the trapezoid is getting wider while the price is going up and my moving average is crossed over. Well, that's all the same function. Price goes up, the function goes up. There's no different angle. You want to see the front facing side of the moon that's lit up and you move yourself, 1 foot to the right, you're going to pretty much see the same moon. But to see the dark side of the moon, you need to come in from a completely different set of inputs. And that's what I always strove to make. So to me, it was important. It doesn't mean they're terrible. The technicals are great. It requires sophisticated analysis, which is the reason I say, I'm not talking smack. Technicals are great if you know how to use them. And then that comes down to, okay, now you know how to use them. And you have to learn how to analyze, how to interpret, and in reality, it's forecasting. Okay, these signals look like they're here. I'm trying to get ahead of the signals because they're probably delayed, because technicals typically are delayed. It's just a function of the math. You can't really change that. It's not a bad thing if you work around it. Okay, I know the signal is usually delayed, but these two things are approaching each other, and if they cross, I'm going to want to be long. So let me go ahead and take the long here with a tight stop, and if they cross, that confirms the direction I'm in. That's how you properly use technicals. Not, oh, these two things crossed over. Here's my signal. you're too late. You have to anticipate the delay and react and respond appropriately. And the delay is used to, you guess that the signal will come because you can see the ahead of time what it should look like. And then when it comes, you're like, oh, great. That's a delayed signal for everybody else, but confirmed I was already in the trade. And so you still have to use proper risk management and et cetera. But the point I'm saying is it's complicated. It's not, you can't just open the box on an indicator and all of a sudden you're printing money as a trader. You have to kind of go through an education on how to understand the ebb and flow of market, how to apply these things. But they're sold to people like, just jump right in. Check it out. Here's the signal. Boom, buy right here. Look at this, made all this money. And then you go in there and stupidly push the button. It's not the indicator, it's bad. It's the salesman. It's bad. As I really told, you gotta spend years with these things and figure out how to understand that ebb and flow and really start to get ahead of the delayed part of this effect. So I always tell people that when you use any tool, you have to go in and learn its boundaries, like when it's effective, when it's not. What are the rules here? Well, they're not clearly stated in most technicals. It's like the rules are, well, this is based on a moving average, so it's gonna be delayed. The signals are gonna cross over probably, 5-10 minutes delayed. Do you have rules in Rocket Seer? Absolutely. Everything has a rule. When do you use resilience? Well, this rule must be there. This rule must be there. Is there a delay? Yeah, sometimes. When markets are rational, resilience can be delayed. Is resilience a leading indicator? Absolutely. When all those lights in the bottom right of the screen are green, resilience 100% of the time is a leading indicator. 99.9% of the time is a leading indicator when all signs are rational. When all signs are rational, there's no reason for the S&P to tether from the stocks it's tracking. Or to deviate. You would have nobody getting squeezed, no margin calls. Nobody would just randomly dump large amounts of SPY in the middle of the day. There's no real reason to. It's so random for that to happen. The idea is that you present rules. And so our dream here was to create something that saw the market from the complete dark side of the moon. The inputs and technicals are price and time, and the output is typically picking direction of price. Our inputs, liquidity map, are options, and the output is predicting volume at a price. Completely time independent. That's why you never see me have to touch my charts. I don't do a 1 minute, a 5 minute, hourly charts. I never have to change that. I just leave it on 1 minute all day, every day. Because our stuff is time independent. We already solved one of the major problems in trading. What candle do I use? Do I use a 1 minute, a 5 minute? Imagine you getting a car and the car has 50 different driving modes. 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, hourly. Which one do you pick? Which one's right for you? Oh my God, look at all that flexibility you have as a trader. Open the box. Rocket Seer, that's the first thing we got rid of. I said, I need to get rid of confluence on time charts. Why did technical analysis invent confluence on time charts? It was to overcome the delayed effect of their indicators. If you are to combine confluence with multiple times, therefore you can build a stronger belief in the signal, which is good. Which again, different times, if the signal lines up on different times, it's part of the oscillatory mechanics of data smoothing. You get a more robust signal. If it agrees with you on larger and larger time frames, then you eliminate certain effects that noise can create on the smaller time frames. Okay, so that actually works for that purpose. It was designed to eliminate those issues that come with that. But the problem is that what's the right candle, right? And it was always hard, and it's not. And again, it takes you years to decide what works for you and how you view those tools, and it's a hard. It's a very committed process, which means as long as you know what you're committed to, it's great, and it's not a terrible thing. But it's not like you can't just open a box and understand how to fly this plane manually. You have to do a lot of analysis on top of the indications. You have to do a lot of comfort testing with what your style of trading is as you're discovering yourself. And so it's just a difficult hurdle for newer traders. So I always say technical analysis is the last thing you should learn once you're getting better at trading. Then slap some really awesome tools on top of what you do, and you're gonna be golden. Because you already understand the markets, and you understand and feel markets, feel limitations. You'll be more easily able to adapt to analyzing something a certain way. So the idea that it's like somebody says, I have a TA algo, You know, click a button and make money is complete bullshit. It is. It's never not. It requires sophisticated analysis by a very intelligent person, and it's going to take you years to be that. Just like with any system. So with us, it was like, how do you make things simpler for people? How do you eliminate cumbersome analysis? And the first thing was, well, how about we get rid of multi-time frame confluence? Like, let's have to look for 10 or 15 different possibilities of candle patterns on different time frames. Let's eliminate time frames altogether. Where do we start? Well, let's start predicting volume at a price, which is where we started. Hedge pressure predicts volume. Multi-hedge pressure predicts volume. Half gap predicts volume. Open and close predict volume. Bull and bear zone predicts volume. All of our tools now predict volume. And therefore, it's independent of time, which means it doesn't matter what candle chart duration I pick, candles, volume is going to be at a price. So now, again, volume at a price is just volume at a price. There's no time included. So if you're looking for timing of your charts, like, how do I know my trade's going to take all day? Well, again, that's the experience level, years and years of trading, and that's the limitation. So with our stuff, you pile our stuff on to technical analysis, you've solved all the problems. You got time, you got price, you got volume all together in one place with no multi-time frame confluence. So now you slap Rocket Scooter on top of anything else. You've eliminated the time game, reduced the noise in your TA, and know where your prices you're going to act at despite the signal to get ahead of your TA signal. Rocket Scooter is the best addition to technical analysis because it solves their problems. And that's why I like showing it to people who use TA. You have a delayed signal? Okay, but you know hedge pressure is where you would likely make a trade from. Okay. You take your long at hedge pressure. There's red candle, red candle, red candle. Hits hedge pressure. You long on those reds. Those averages haven't crossed over. And then it's bouncing there, bouncing there, bouncing there. Then they cross and gave you your delayed signal and you're already in the trade. Boom. You don't have to use anything else other than knowing the place where you're looking for the volume. There's your leading signal. That's where the volume will be. Okay, I want to be a bear there. Okay, let me take the short. You're in first. Then the signal comes later. And now you fix their problem. And that's why we're excited to share this with the world. This TA is very good. It's very good at what it does if you're good. That's the thing. On its own, difficult. So you have to understand what you're dealing with. And so you guys traded a half gap. Y'all are some ballers here. I love y'all. Oh, Matt, may as well use astrology if you're using those drawing tools. Yeah. Oh, I saw that you solved your problem with Chat GTP. Isn't that crazy, dude? That's amazing. I was reading. I didn't say anything back. I was kind of going through the Discord. That's hilarious. Sorry, I can help you with your question though. So my goals here are to pair Rocket Scooter with technical analysis as the bigger goal, to add confluence to techniques. I'm going to take every technical analysis tool that exists that's worth a damn, and I'm going to add layers to it that's going to make it work infinitely better. So that's my goal. Now my personal taste, as everyone says, my personal taste is I don't use a lot of pretty much any traditional TA, but that's just because I'm such a snobby hipster about trading. I have to do it for it's cool. I have to make my own thing. I make my own pickles and my own soap from scratch. Okay. Yeah, I'm a trading hipster. Don't make fun, but at the end of the day, we do have the ability to work with some of the best technical minds on the planet, and in a very like open debate forum, you know, address some of the problems that do come with TA and say, you know, some of the issues that require a little bit more subjective analysis. Like a new trader is not it's kind of like this, right? You have to be an expert in something to use it well. Well, your first day on the job, you're not gonna be the expert yet, so you're not gonna use it well. So you're not gonna have faith in it, or you're gonna use it wrong, or learn it how to use it wrong. And that is that cyclic problem of using trend analysis. You have to already be good to be good with it. And when you're good, you read those tools like it's nothing and you kill it in the markets, and people see you do it and they can't replicate. It's because they don't have that sight to see it and read the analysis well. And most of it requires commitment to the learning process. And a lot of humans just don't have patience to commit to learning. So what we do is we can reduce the amount of bad signals using rocket scooter rules and things like that, and reduce some of the delay problems to where there's a more repeatable behavior that can be used by newer students. Like stricter rules, turn off your indicators under these conditions, turn them on under these conditions. Here's an example. Everyone's technical analysis that we're going to put in rocket scooters are about to, like if we add tools, for instance, right? Can have the ability to turn themselves off when there's a catalyst. Easy as that. Create a rule if market drops somewhere in the risk interval, it's going to turn off all the moving averages. It's not going to be useful. It's going to turn off liquidity maps. It's going to turn off resilience, right? So you can remove a lot of bad signals when things are trying to produce signals in real time under all circumstances. So I'm excited to be the platform that creates TA 2.0, literally 2.0. We're going door to door telling everybody this, right? And we're getting a lot of interest. I've been asked to speak on 2 podcasts this week to talk about this process, TA 2.0. We're revamping technical analysis to remove the problems that are ingrained into it, to create more sophistication and layers. So most technical analysis doesn't inherently incorporate volume or positions into the equation, so they will now. Rocket Scooter will combine our tool with someone else's tool and create tool 2.0. So I'm telling you, we're going to be the company that recreates technical analysis from the ground up. T and A indicator. We're gonna have a T and A indicator for tits. Oh my god, this is gonna be one of the golden rules of trading. Learn market structure and rules before even considering using tools on a product you know nothing about, and that's it. And then you use the tools, and then you're like, holy shit, the tools actually work pretty well. But it's not because of that. It's because you're better at trading. You're better at seeing the market. You're better at analyzing those tools. You have better conditions as to when to use them and when not to use them. Look at the SPY going to the bull zone today. I'll believe so. I like what I see. Resilience is positive. This is great. All this stuff looks great. Let's go back to looking at. So like I said, over the years, you might have heard me just like particularly have a distaste of traditional TA. But under the hood, my goal has always been to revamp and change the status quo of all indications and analysis. So I knew that ultimately our goal would be to bring a brand new set of tools that other people make and enhance them with positional risk and rule-based analysis. And that will create a robust, less learning curve, easier to use tool with less noisy signals and better conditions to use them. I'm going to take everybody on planet Earth's tools. I'm going to put them in Rocket Scooter. And we're going to make better versions of everything with that person who made that thing. When you guys are in this platform, y'all are witnessing history. For sure. And we're hiring 5 people in the next month to take on this task. The S&P 500 does not show up in your chart. I can't read your name. Is that Arabic? You're a beginner. Okay. What you would do, make sure you do SPY in the top left of your chart. I'm so blind. I can't read little small text. Arshpreet, hey Matt, when did the light bulb pop in your head about using market maker options data? So there is no market maker options data. We had to create that data. We have a data company that takes the Opera data and chops it up and distributes it to us, and we told them what we need. We created an algorithm that determines what's market maker data. We created that data feed for ourselves. So to quickly answer your question, to use market maker options, the process, what really went off in my head. So by the way, like a lot of people don't know, underneath the hood of Rockets here, there's so much, we've hired so many brilliant people for this company. Like, we created a data feed that no one else in the world has. The market, we were like, where do you get market maker options data? We created that. We invented that process to make a data feed that has only market maker options. We invented that. And we're the only ones in the world that use it. We invented it for ourselves. And the cool thing is that you'll have to go out and invent it yourself if you want to figure out how it works. So we're never going to give that data feed to anybody. It's only going to power Rocket Scooter. And the light bulb went off in my head a long time ago when I was teaching red lines and yellow lines to a client of ours, long time ago. I'm talking like maybe 2016, 2017-ish. Had a person who was an options trader. I knew nothing about options, nothing. Options kind of scared me. They were too much information, too foreign. It was just too weird. I didn't understand any of the terms. Just, we're using red lines, yellow lines, and green lines, which we still use to this day, right? Illiquidity pivots and futures, and risk intervals. This person was like, dude, you know what you made with this yellow line thing, right? I was like, well, it's like it's hedging, market maker hedging, illiquidity, pivot. There's moves based on one-sided punches at the market. Before we call them impacts, he's like, oh, no. He's like, well, yeah, but anytime you're approaching yellow line, I sell calls on the other side of it, like immediately for the next expiration. And you just prints money for me. And I was like, what do you mean sell calls? How does that work? He's like, well, look at this. And he started showing me how calls work. He started showing me how, especially if you hit a yellow line near an event like an earnings report, premiums go up. He's like, look, IV, right? You're building implied volatility in the option, the premium goes up. Taught me all the Greeks about it. And I was like, okay. And he goes, yeah, and what does your yellow line do? And I say, well, most of the time it's a resistance. At minimum, it just hits it and holds up for a couple of days before it rallies through it. He's like, yeah, don't you see? I collect time as a profit. It's like, what do you mean collect time as a profit? He says, any minute. He says, every moment it doesn't rally through this yellow line is money in my pocket. And I was like, you can bet on time? He's like, absolutely. It's called selling options. You're collecting time. The time that something doesn't happen, every moment it doesn't happen, is pennies in your pocket. And over time, if you get it right, he says, you invented something that tells you where the market's going to stall. And in the event that there's earnings, it bakes in an artificially high premium. So I sell it at the high point and it stalls right for earnings. And then it's just like dollars print in my pocket. It's like I sell calls on the other side of yellow line right for earnings report. And I close everything out beforehand. It's like or after, once the IV crushes. I was like, oh. And if I long options, I long up till earnings and sell it. Same principle. He told me all about it and I was completely blown away. The minute he told me how options worked, I was like, I started looking around the internet for like things that satisfied what my brain immediately invented. I go, you mean you're telling me there are instruments that people can use and buy that show their risk of what they want to buy at some point in the future? And there is a sophisticated mathematical equation that sets prices of those things based on the probabilities of it striking in the money and out of the money and how it gets there and the shape of how it gets there and the speed of how it gets there. He's like, dude, there's a Greek for everything. There's a Greek for acceleration. There's a Greek for velocity. There's a Greek for acceleration of acceleration. He goes, there's infinite numbers of, and my brain is going, oh, thank God. I've been trying to type calculus the stock market for the longest time. I can measure speeds, velocities, acceleration, time it doesn't get there, time it gets there. And somebody's showing me they want to be long stock at this point in time in the future. My brain exploded that moment in time when this guy was teaching Black-Scholes to me. I immediately read every single thing on how the equation works. I chopped it up into pieces. I learned how every Greek works. I learned how the math works of options. And the first thing I started building was the walls. Because I knew, because all of our stuff in the previous days were explaining what we knew that market makers could do. Because in the futures world, it's a lot more transparent than the stock world about how the machine works. And then the CME creates lots of cool videos on how the Globex works. All the cool little autopilot type features on there. Price banding, IOPs, like a lot of cool stuff. And you're like, wow, it's so fascinating. This is a machine. And they give you an instruction booklet on how the machine works. I can look at so many cool things here. In Risk and Revolt, sorry. I've been a horse from last night's partying. Risk and Revolt sort of was an exploit of the margining process. So I was very fascinated in exploiting where I can identify liquidity providers and how can I decide where market maker options were in the batch of options. Is that was the Eureka moment where I jumped out of the bathtub naked running down the streets. If y'all remember the story of the word Eureka. But really, I know the behavior of liquidity providers as a hedge their risk to zero. So it just became amount of time where I figured out a way to identify that in the order flow. And then we created our own data feed to give us the answer we wanted. And the light app was born. And we built walls first to identify illiquid places. Remember, red lines and yellow lines were already illiquidity pivots. These are illiquid positions. A similar thought process go into that. Something creates a call or put side wall. You guys like the story? The history lesson? So, first thing is to identify where dealers bought options. That was the walls against the market. I longed the market, dealer shorts against me with the call. There you go. Then I had to go round two, which are who sold those calls to those options. And they're going to hedge their exposure for those options possibly exercising in the money or being assigned those positions. So hedge pressure is the gamma exposure of option sellers to market makers of the underlying stock. And that's where it ended up. So hedge pressure is the exposure of the option sellers to the market makers. So identifying market maker options is one thing. Identifying hedge pressure was another thing. And then, like I said, light app was born. I forgot all three of those. And then studying the relationship between the active illiquid side of the market, right? Bulls and bears here, against the dealers of the underlying stock. And then the relationship between the option sellers and the dealers of the underlying stock made that triangle happen. And we said, okay, what's the relationship between trader who buys a stock, market maker who's on the other side of that trade buying insurance, and then the insurance salesman. And the insurance salesman, those puts and calls that they sold the dealers, they're the ones that have to go into the market and fish out shares to hedge their exposure. Well, you're the trader that was also trading shares. So the dealer in the middle is now facilitating a trade between the option seller and you, the trader. The option seller is buying and selling the stock, and you, the trader, are buying and selling the stock. So the dealer in the middle is the one that threw you together and matched buyer and seller. And that was the genius, the triangle, that invented liquidity map. Liquidity map is a relationship between those three parties. So long story short, this is the relationship, because if I buy the stock and push the stock up, the hedge dealer has no risk, and the call seller to him now has to long after I longed, because that calls down the money. You have to acquire the shares, they don't have them. So the point is that if the call seller, or if the market sells and calls go out of the money, then that call seller is going to be selling those shares at a rate of delta, and I'm the original one that bought it. So seller and buyer have now found each other, that more sophisticated relationship. And that's where it all kind of boiled down. That's the history there. So, and where did a lot of inspiration come from? People like you, all of y'all. See, the thing is that we invent something cool. We bring people in, they see it, they're like, oh, this is cool. I like what you guys are building. Can I join your community? Sure. And they join the community. We used to do so many different meetings back in the day. We called them study hall. just a code name for it. Study hall was actually like secret meeting of like the Freemasons. Like we would get together, do secret handshakes, you know, do funny dances and take over the world secretly. But seriously though, it was a study hall. Was actually not a study hall. It was actually an inner outer circle type discussion. Lifetime only had the access to it while reinventing these things, and it was top secret for years. And we would get together, we would vote, we would look at things, we would do studies, we'd present our data. People would be involved with the data, and we would have trusted people with the data that would present. We would objectively look at. We would not go into it with a bias. We would look at the data and make sure it worked. And everybody in that study hall had to vote yes for something to become a tool in our team. Everybody unanimously would vote. Every piece of hedge pressure, does this work? Okay, is this rule here? How do we rank these two indicators together? That whole process was determined by a community of smart people, voted on, and I had to finally trade it with my own money to prove it. If we made a rule, it's always traded with my own money as the final stamp of approval. And so it was like a process we invented that was just a fun little geek club of nerdy math guys like myself that like to build tools, math guys and girls, tons of people were part of this team building tools and discussing. Here's what we found. New people would join, they'd expand. New people would join, they expand. Like as a team, we built these amazing tools. It wasn't just me sitting in a basement coughing it up. Came up with most of the ideas, pretty much all the ideas myself, but hashing them out was like me doing the data mining and crunching numbers and presenting my evidence to the group, and the group would challenge what I brought. We'd go back to the drawing board, we'd challenge it again. I mean, it took a team to build this brand new thing. Let's just fully honest about that. You guys were completely part of the process. A lot of y'all were. If you were part of this process, you remember the study halls. Somebody say, I was here for those study halls 3-4 years ago. Y'all remember those things. They were fun. Came up with resilience. We would get together and talk about it. We'd make spreadsheets of everybody's use of something. How do you use resilience? Oh, well, I use it here and I use it here. Oh, wait, that's a cool idea. Let's go with that. Let's test that for a couple of weeks. Yeah, actually, it does work. Are there other conditions that could challenge it? Okay, under this, under that. It's very fun. This was a really fun process. So, read some of you. I'm missing y'all's comments. Maybe a stupid question. Would it be possible to see historic monthly maps and compare them to actual market movements? So think about what you're asking. A historic monthly map. So every day the monthly maps are going to change, and they're locked onto a date. So a historic monthly map would be like, this is Thursday. This is what the map looks like. So pretend this is what Thursday looks like. If we move to Friday, these are all going to shift around a little bit. So you're just going to see like boxes stacked on top of each other in the same plane. We'd have to find a way to show historic changes between like 2 days or 2 weeks. It'd be hard to display a historic monthly map because monthly map projects into the future. This day is always going to have an expiration on the 16th. So every single day, this will change a little bit. So you'd have gray boxes just piled on top of each other. It'd be really hard to display a historic monthly map. The idea that we had to do so is not showing like historic monthly map over all days. It's to compare 2 days. If I do historic monthly map, I can say, how did monthly map change between like right now? How did monthly map change from last Thursday to today? And I can look at each data point on how it modified. So it would draw like the Thursday next to it like that. You can only compare 2 days so it doesn't look like a big clusterfuck. Right? It would look like that. So that's a cool idea that you were saying, Michael. You guys like the idea like that? It's pretty cool, right? So the idea is that I would say like, how does a monthly map change from date X to date Y? And we can show date X and date Y just like that. Ooh, market pulling back a little bit. Do you guys like that idea, Michael? So like I could say, oh, so over the course of this week, sentiment has changed to be more bullish and more bearish over the course of the time between the 2 dates I picked. Absolutely. Something we're going to do. But if you start comparing 2 or 3 or 4 dates, you start running out of space to like comparison boxes. So we want it to be a comparison box, right? How did it change between 2 dates I'm looking at, right? So this would be, I honestly love that idea. And see, this is what I'm saying. Even Michael, you guys sitting here coming up with like, wouldn't it be cool? Wouldn't it be cool? Wouldn't it be cool? And then we go, yeah, that would be cool, right? And so as you guys keep getting inspired by what we make, and then you re-inspire us, it's like That's the process of Rocket Scooter. We keep creating new ideas and new ways to show stuff. Now, you know, as you see, like with SPY, you can't cram boxes next to each other on these daily expiring weekly options. So what you have to do is you can only really do it on the Monday, Wednesday, Friday ones, or the Friday ones that have space to draw. It'd be really hard to draw if we're using the whole box type thing. Now, again, we can make the box like half the distance between the 2 days, but the problem is we're limited to drawing inside of the TradingView library. The problem is the coordinate system of drawing in TradingView library might not let us draw half of a box. We've cut these boxes by half size on the width. We might be able to do it. The problem is the Cartesian coordinate system of the charting library only allows you to chart at a date. So the trick is he's charting from date to date. So each date is a data point on a daily chart. Now, we will be able to do it on a daily chart, but the trick would be maybe an hourly chart. It'll give you that flexibility to draw boxes inside of each other. So he'll be able to draw hourly candles. And then maybe do it. And like I said, we haven't explored doing that just yet. See right here, it's not locked. It's each x-axis data point is a single hour. So we could do that if we chop the boxes in half. So that's actually something possible we could do. But at minimum, you really are only going to want to compare over a period of time. Like, okay, we just went through earnings week. How's the sentiment changed a month from now? That's an amazing thing to make, right? So that's something that we absolutely can make. Like, oh shit, market is more liquid. Okay, cool. Or, oh wait, hold on. After this, we compare last week to now. A month from now, the market's now more volatile. Something new's there, and people are very scared of being in a position. Okay, what's causing that? So yeah, 100%. Historic monthly maps is part of the process. I like that idea. Okay. You guys have more questions? Close your longs. You guys killed it. You guys are so awesome. Feel much more confident in your trades. So some jitters sometimes, Lee. Goes away over time. You trade. Let me tell you, it takes years to not have your hand shaking your mouse and you're losing money. I bet you most people can testify to that. When you're in a trade's losing money, your hands are shaking and jittering. Oh yeah, it's pretty normal. Get a little antsy. Never goes away. You will never have that go away. It just gets quieter. And you learn how to feel your confidence allows you to turn that fear and anxiety into anticipation, excitement. Like you go, I'm confident, I'm excited, nervous but excited. So working out those emotions is always just time. There's only one way to shape it out long periods of time. Oh yeah. I think I'm going to take a long in the big account. I missed this, but I'm going to go ahead and take a long. Resilience looking good. This looking good. And it's a small long. So the R&R from here to bull zone. Here to here is great. DD staying nice and strong. Monthly hedge pressure resilience is nice and strong, which means a strong bullish close of the month. 410, no way. Looks like it's going to break, which is good. I'm going to put it's a couple of contracts, nothing big. About a 30-point rip potential to about a 25-point drop. So I have a couple of contracts I'm willing to dive in if something happens here. All things looking strong. I like it. Okay. Watching see if we blow through half gap. Yeah, right now it's because you have irrational signals, things are going to be delayed. Even hedge pressure breaks to the upside will still show parts of delay because you're going to have these irrational effects. It's not just going to like zoom through half gap really quickly, but all signs say that we're going to fill the gap. Oh yeah. Oh yeah. That's good. I do like it. Would pairing Rocketeer with market breadth be better in team? Actually, not a terrible idea either. I think Pairing the principles of Rocket Scooter, which are time-independent volume analysis. Because if you identify where market makers are, and market makers are the entity in the trading markets that produce volume without price action, just a hedging. It just takes a tiny movement to push an option in the money that forces somebody to long massive amounts of those shares. You'll see very tiny candles and large amounts of volume. Well, that's your dealer side of the market. So the idea is forecasting where volume can be at a price based on dealer options. They're the ones that are forcibly trading. Forcibly trading to balance delta means they're repeatedly doing the same thing every day, which is what makes it such a strong analysis type. Here we go. There's that hedge pressure touch. You have anything going on? 10:15. Oh, European markets are closing in 15 minutes, so that's what you're pricing some effects there. And I think pairing volume analysis with any technique is a good approach, Rocket Scooter. I was used to it, but this helps you in the ins and outs of trading. Committed so humans can even commit to the person you love. Diverse. Yeah. Very true psychology lesson, Travis. This is wild, amazing, awesome, man. Glad you like it. Question is BRLU. BR because it's irrational. No, BR means bear zone. Bicep, you got to go watch his videos, man. Watch the video on liquidity map. There's in liquidity pockets, bear zone and bull zone is very well defined. BR just means bear zone. That's it. SPY, BR, you're in the bear zone. This is just communicating to you all the things in one gulp. Like you want a very quick read on the market. Bear long up tells me we're in the bear zone above hedge pressure and hedges above monthly. I get it all in one gulp instead of like, okay, let me. So remember, if you do have a bunch of technicals on your chart, you're like, okay, let me analyze this one. Okay, let me analyze this one. Okay, my eyes are in a bunch of places. This one tells me three things right out the door. I look at these letters and I got it. I don't have to look at three different places. So one gulp. Bear zone, long above hedge pressure, up means hedge above monthly. Bear long up. So bear and long means you have bearish positioning and long hedging. They're pressing against each other. Bear and long sound conflicting. Well, that's why this isn't rallying straight up or crashing straight down. You have certainly two pressures pushing against each other, which is why the market is fighting its way up. And bear long tends to have that consideration. You have downward pressure from bears, long pressure from longs, which is long hedging. There's that kind of behavior. If you opened above, it would bounce and be up. We didn't open, but we opened below and broke through it, but it's the same effect. You have downward pressure and upward pressure. Same thing with the bull and short, right? So a bull with a short hedging has a similar approach as well. You see there is resistances and limitations to movement, depending on where you are. Here, bull side pressure against short side hedging has a resistance in the middle. It's just a whole neat way to see it. But this is just to give you all information very quick. Instead of saying, okay, all right, we are in the bear zone, so it's bearish. Okay, we are above hedge pressure, so it's this. It just says, boom, there it is. And it's an easy way to just kind of catch it in like one gulp. Yeah. That was the whole debate, was like, how do we read the entirety of this in just like one indication? So that's it. Bull long up tells me free to move. Bear short down tells me free to move. Bear long, bull short tells me choppy. Up or down, the relationship between weekly and monthly options creates a different liquidity map. Some of them, it just adds a little more volatility, like the bear long up. Sorry, bull long up is just free to move up. But with this down configuration, you see that it's choppy on the way up as monthly hedge pressure is providing resistance. You see how there's a choppiness here. Same thing with the other side of the coin with the bear short up. Bear short down, things are free to move down. Bear short up, we notice when those are flipped the other side, you see that it's choppy on the way down. These are those competing pressures. And again, the difference between up and down drastically changes the expectation on certain other liquidity maps. Bear and long, which is the competing ones, the difference between up and down is majorly drastic. The U makes it a particularly bearish overall pressure. So if you think about it like this, you have bear and down is like 2 downward pressures to 1 upward pressure. If you think about it like that. So it flips it to bearish. Bear, long, and up is 2 upwards and 1 downward. So that wasn't the choice to make it up or down. That's actually what's observable. If you really want to just kind of boil down why it would be observed that way, is because you have down and up is an upward or downward hedging bias between the theta that exists between monthly and if you guys are smart enough, you've probably been thinking, why do they separate the two? Well, the theta on monthly options is much different than the cascading theta and change of theta on weekly hedge pressures. So as you move out in time, the time effects of Black-Scholes definitely matter. So if the longer term options hedge lower than the shorter term options, that's a more robust bullish setup. So you can see that like the difference between U and D and these 4 drastically change that effect. It almost tilts the scale very far to the other side, and that's cool how that works. But that's to answer your question there. Yep. How does mean reversions work? They all work the same. Market's random when it passes through the middle, no matter what. It gives you the additional long and up just so that you know any additional data you need, but all mean reversions are the same. You are not bullish, you are not bearish. That pressure pushes to the middle. And whenever you have hedge pressure sandwiched between them in all the orientations, like we can make mean reversion, long up, short down the same way, but they're handled the same way. Once you pass through the middle, the market's particularly random, and it's going to just ping pong randomly against all those pivots in the middle anyways. So any mean reversion XX, we should probably put like dash dash here, are traded exactly the same way. Typically not traded. You can't make a discernible thing. But if hedge pressures are together, like here, but the hedge pressures in the middle, and you're like mean reversion short down, and then it breaks through hedge pressure, you're still in the middle. If it breaks to the bull zone, then you're bull long up, and then you treat it like a bull long up at that point. If that answers your question. This discussion is very helpful. This rationale should be in the basics video. We should do a basics video today. Let me check my schedule. Let me see what's going on. We have doctor appointment at 1. We're gonna go to lunch at 12. Let's see. So a tick below, it'll flip to BRSU, right? So what it does is it's just showing you how, like, imagine that every single thing that you see on the chart is going to provide some kind of push, right? Bull side, there's bulls there. You can just assume that maybe there was a bullish pressure there and a bearish pressure in the bear zone. Hedge pressure pushes away from it no matter which side that you're on. It just has a repulsive force through the nature of how this works. And so as price randomly navigates because of people buying and selling, if somebody comes in and just buys a whole chunk of something and pushes price to there, and then they let their finger off the button, imagine like you going in outer space and turning on the afterburners on your spaceship, and pushes it this way, and then you turn off the afterburners. You're still going to glide until you have another pressure that pushes you. And so think about it like that. Somebody buys and buys and buys and then lets off that pressure, and then you're kind of stuck based on the static pressures that are there in the market. Oh, we're up here. Okay, well, now it's just going to kind of bounce around until another pressure comes. Oh, somebody came through and sold. Push it down there. Oh, okay, they stopped selling. Now it's susceptible to this. Okay, it's going to chop around and kind of stabilize in the middle. So if you think about it, it's like you've got these jets of air constantly blowing, And humans are going to push it into different regions. So if you break through hedge pressure, the L changes to S, S changes to L. As that pressure, you get on one side of an airstream pushing this way versus airstream pushing this way. So you're going here, it's resisting, 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 and then it's pushing through. The air starts throwing it this way. Like, it doesn't even see this anymore. So yeah, I need to answer your question. That resilience is looking hella strong. I like this. I like this a lot, actually. All right, just worked out my schedule here. We're gonna actually get crawfish at about 11:30. So, no video today. We have for our doctor's appointment. We'll come back later and probably do a Zoom call. Oh, Abe. Oh, no way. Kick ass. I like it. All right, everybody. Love you guys. I'm gonna bounce out of here. Is it possible you keep both accounts on your screen and make your rocket screen a little smaller? It's fascinating to watch the way you show your masterism. This is what I want you to watch. I want you guys to see this. This is part of what I'm committing to. The patience in a bear market. This is what I want the focus to be. If I do the other thing, number one, it'll take up too much space on the screen, and number two, you guys will focus on that and not learn from this. I want you to learn from this as a bear market. I want to do the small approach. So that's another reason. I don't want to put two trader baits next to each other, but another reason is you will completely ignore the skill that's going into this. People will sit here and watch me take more risk and riskier trades in a riskier environment when I'm comfortable taking that risk, when that's not what I'm teaching people to do in this particular focus, is how do you take a funded account for 45 days, get paid to fund your own funded account. The only reason I'm not doing them sequentially, one after the other, is because we're blazing so fast at Rocket Scooter that I don't have time to do them one after the other anymore. I have to do them at the same time. I would rather not be doing the 10K and just doing this focus and waiting and then doing the 10K. But by the time 45 days is up, we're going to be 10 miles ahead. With our next steps and the things that we're building. So I don't have time to do them side by side, but like I said, I can't abandon this challenge. The other thing is I could just abandon this and just do the other thing. The problem is that I am creating the world's first video series of how somebody can take $300 and turn it to 10K, and take 10K and turn it to 100K, and I'm gonna take 100K and turn it to $1 million. I'm gonna do A, B, C, D. I'm gonna film every step of the way. So for the film, which is on YouTube, which is what you're watching right now, it's going to have this part at least. Yeah. So now some of the portion of the 10K to 100K is not going to be filmed clearly like right now. But the part that went from whatever it was, what was it, 10K to like 30K or something? That part was filmed. So there'll be a gap between, 20K and somewhere. Or I can just do it again, but I don't want to do it again. As soon as I'm done with this, hopefully I'll be at 100K, and then I'll bring the 100K to million on the screen. That'll be more exciting. But you gotta scrape out the harder part first. So that's what we're gonna do. All right, love you guys. Head on over to the Discord and head over there. Get the extended trial in the description below. $35 a month covers your data feeds, access to the platform, access to all of our tools, and you will be able to scoot your way ahead. But in your trading analysis, Rocket Scooter is the future of analysis. We do things other people can't even dream of. And it's all thanks to folks like you. So join our crew, join our community. We're pushing our 4,000th user account currently. So let's keep it going. Tell all your friends, tell everybody we love it. We love you guys. Tune in to us tomorrow. We'll be live again, just like we are today. Thank you guys. See y'all later.